Warriors, how are you? Everyone doing okay? Hello, Enrique. Dan, how are you? Everyone doing okay? Hello, Joe. Nice to meet you. Hi, Ziggy. How are you? Okay, so it's taken some patience. Yesterday, I showed the Canadian sitting on the ledge. It rolled over after I showed it. I interviewed Stelios was on, and I showed it hanging on here, right here at the moving average. Took it out, accelerated for another 40, 50 pips. Okay, I don't think this is going to be the end of the move, but maybe there's another 100 pips in it. Just my extremely accurate and humble opinion. I think we could still stretch to 32. So rallies back to 360 should be contained, 360, 370 before we get to 32. Give me a Y if you're with me on and get the analysis of this, of Canada. Also, interesting look. I was talking to Blake yesterday. He was long the euro, well under 106, and I said, I think it's turning. And we had a little bit of a throwover on this wedge, and it does look to me like it's turning. Also want to take a look at the Dixie. You know, went to major resistance, and it's coming off. So this turnaround Tuesday can actually be about a weakening dollar. So here we are, trying to hold the 200 on Dixie right here. So those are my views going into it. I'm sure there's a lot of updates subscribers are aware of happening here on FA, ForexAnalytix. Everyone doing okay? So the most recent is new update, basic technical for the gold. So I'm going to make it community choice. You want to see the new update, basic technical for pound dollar or for the gold? Just says gold. I have one vote for gold. Cable, gold, cable, gold. Gold, please. The magic words, please and thank you. Okay, you know what? How about this? I'll show them both. A Janet Yellen impression? Yeah, I heard her interview. Well, we used to have our foot all the way on the gas pedal and the accelerator. And now we're just coasting along. We don't have to push our foot down to all the way to the bottom. All right, here's your update for gold. Basic technical. Here we go. Here's your chart. It's 1 hour, it's the most recent. So after this reversal, we held where we had to yesterday. Everyone see that? Here's the commentary. Finding support yesterday. We're back into resistance. End of day, as long as we remain between 1250 and 1260, there's not much to do. A break before the former will be corrective, move lower, and a move above the latter will be 1280. So there's the gold, and I promised you cable as well. So basic technical again for cable. Most recent charts of 4 hour. Broke the symmetrical triangle, rallying back to it. Cable's been much stronger than the dollar. Let's look at the commentary on basic technical. Approaching the underside of the trend line, which we showed the triangle. But the risk is we breach back into the triangle and post a false breakdown. So this would be your false breakdown if we got back inside the triangle. In fact, sometimes the first breakout's the fake out. So this may have been the fake out, and now we could end up attacking the wedge line up here, the triangle line up here and heading up. Let's get a little bit more of the commentary here. And if you're a beginning trader and you don't know what a triangle is, you just click the red button here and you're going to get a definition of the triangle. Okay, you're going to get definitions of all basic technical formations here. Everything. Everything in the universe. What about the yelling? Okay. So those are your two looks at FA. As you can see, things are pushed out. You'll see I may get some alerts here later on in the day. Everyone doing all right? So, okay, face community. Here's a look from Luca. Hi, Luca. See what Luca has here. He's holding the long Euro Aussie and Pound Aussie from Monday, short entry in pound. See what Luca has. Luca's an excellent trader. See what Luca has here. Okay, so Luca is looking at the same triangle and considering it a short off this breakdown that we have here. I'm going to turn off Skype. It's a little bit distracting to me when I'm trying to talk live, so let me just get out of it. Sorry if there's dead air. I'm trying to get out of the Skype. I'll get back to it later. Okay, so nice look by Luca. Luca's looking for another move back down to 23 after this bounce. Nice look, Luca. Any other looks from the community? Any other shares? Okay, Dan's with you. Looking at a multi-swing long on EuroCAD. And do you have a chart on that? Let's see what Dan has. Still bearish Swissy. See if this works. Who's having a good week? Okay. Oh, this is the yen. You have been. Still bearish yen. That's okay. Hi, BW. How are you? Still bearish. We are diverging here. This is Euro yen. I thought you were looking for longs here. No, that wasn't you. That was Luca. Okay, thank you, Dan. Okay, so yeah, that's something else I want to talk about. I think that we could be there. We got the targets on Aussie Kiwi. I tweeted about it. I believe we have a quality there. So this was a 3-drive setup that set up a C wave if you're an Elliotician. This pullback to 107.5 may have been it, right? Pretty close to quality. And then when you look at the daily breakout, pretty close to a retrace of this breakout right here. I'll just draw a horizontal line. Wrong one. Right here. There you go. Pretty close. Is that what you were talking about? Okay, Brian. Yeah, it may have completed yesterday, today. This is a daily. We start taking this out, then you have a deeper retrace. It really shouldn't close under 107.5. If it does, we're looking at probably under 106. And it shouldn't give people a lot of time to buy the breakout, the test of the breakout. Give me a Y if you're with me and you get it. We have a great interview today. Terry Kinder. Anyone familiar with Terry? Terry was one of the first to predict President Trump victory. He uses Murray math. He's got a real nice PowerPoint. I hope his internet's up and running so we can conduct this interview. A lot of people, are a little critical of his charts because he has so much detail in there. Puts a lot of work into what he does, and he's an excellent strategist and technician. So I'm looking forward to talking to Terry in about 45 minutes or so. So how's everyone enjoying FACE? It's been a little over a week since we've been together. What's your favorite part of FACE? The interviews, the sharing, Blake, the interaction between Blake and Nick and Grega. Clayton says fantastic. Are you a subscriber, Clayton? Okay, Patricia really likes the interviews and analysis. Any other views or trades that you guys have going on? Ziggy has produced a new Man Award. It's a Face Award video. We'll have it loaded up in here, and I'm looking forward to giving out the Face Award to you guys. Here's a look from Hardianto. If the Face Award was, if the Face Award was available to show today, I'd give it to Hardianto for his patience in sitting with Canada all the way through the NFP and everything else that's been going on. You've displayed a lot of patience. You still there, Hardianto? Have you taken partials? Jack Boyson, your name sounds familiar to me. Half off, smart. So here's a look from Hardianto. Euro pound. Interesting view. It's been sideways, so we could get an E-rally back to 87 and then a big break. That's a very nice roadmap that Hardianto is sharing. Take a picture. You're welcome, Jack. Okay. Great look. Remind me when we get up here, all right? So there could be a scalp to the upside in EG based upon Hardianto's work, and then a very big break. So this might be part of the Euro pop that I'm expecting, that EG recovers back to resistance, meaning that Euro's going to outperform the pound for a little bit, for about 150, 180 pips in EG from where we're at right now, and then the big break in Euro and the next rally up in the dollar. Interesting view. Okay, here's some supply demand work on Kiwi Yen by Jess. Jess is a professional trader, good friend of mine. He's been around for a while, following me wherever I go. Dale the Gypsy. So this is my last stop with Blake here. I'm not going anywhere. Had a little rebound trip after FX Street. I was on the rebound. I've got my sea legs back. So here's a look from Jess. He does great supply demand work. As you can see, you look left to find your supply demand zones. So, and Kiwi Yen, we have some demand zones setting up from Jess at 7626 and 7553. And he's looking for recovery back to 7910. That's a great setup and a very nice look. Everyone thank Jess. Thank you, Jess. Nice view. So we've had quite a few nice views here already in 17 minutes. Don't you think? Luca's got another one. Okay, anyone a USD note trader? As a subscriber, you're going to get pushed these alerts on your phone or your platform. It's pretty cool. I like the sound it makes too. It sounds like a cricket. Okay, let's see what Luca has here. There you go, Clayton. Thank you for thanking people. You could. I like when we thank our contributors, because they've paid their dues in blood, sweat, tears, and capital to get good and show charts that you could prepare for trades for, and giving it away for free. See what Luca has here. The bun almost at his short area. I thought you were looking about 63, but you're going to wait, let it get up to the top of the trend line up here, bro. Thank you, Luca. 164.90. Yeah. See your number. We could get some a little flight to quality here. Okay. Thank you, Luca. Thank you, Jess. Thank you, Hardianto. Thank you, Dan. Thank you, Luca. Thank you, guys. Nice looks. Who thinks this is the most talented community on the net? I'm not objective, so it's got to come from you guys. Between the community and the team, Okay. USD NOK. Everyone doing all right? So Hardianto was talking about a 3 drive in the guppy. I didn't mean to do that. I got rid of them, whatever they are. Here's 1, here's 2. We're not there yet, right, Hardianto? Armand, how are you? Armand, another professional trader. Armand's been with me a long time. Let's see what Armand has. I'll bet that it's I'm just betting that it's a black chart background. Okay, thank you, Hardianto. Let's see if this works. Armand's a top gun. I may have taken too much of the link. Let's see. No. There's that black background, Armand's trademark. So Armand sees a big move coming here. What is it? It's a pound. Okay. So Armand's looking for something we talked about last week. So whoever sold that kind of lines up with what we talked about, is that initially we're underneath the trend line, get a little pullback, but Armand's got a view that we're headed towards 128.80, maybe 129 in cable. Don't fade. Don't fade, Armand. Okay, Luca looking for a puke. One more. Thank you, Armand. Luca's looking for one more capitulation move in Euro Yen. See what we have. Give me why if you enjoy the looks, seeing charts from others in the community. You know, most live rooms, it's only about what the moderator sees, and there's very little participation from the community. Everyone stands up when the moderator or host does something and sits down when he sits down. So here's the buy zone that Luca's showing. It would be a higher low. And he's looking at about 1575. Okay, so about 6 of you enjoy taking a look at the community's views. I'll tell you that a lot of guys that have been with me, this is not a hobby. Okay, there's some face confluence. You're right. So it's intelligence gathering, right, Toby? Right, David? You know, you're not compelled, but it may be something that you didn't notice that now you could pay attention to, coming from, you know, surround yourself with people better than you. Okay, Jack. So I want to thank Luca. I want to thank Armand. Everyone thank these guys. Enrique thinks it's nice here. Let's see what Jacques is getting excited about on the gold. It's up $9. Silver. Silver is so much weaker. So see where gold's at when we get back to about 1815 here. I think silver's a short over gold. If you want to short the metals, short the weakness here. It's a nice rally in gold. Maybe we're headed back up towards a third drive line up here. It's a possibility. Let me just extend it out. Third drive line would take it up towards 1280. Give me a Y if you see it. If that's what's going to happen, gold makes another new high and silver posts a lower high. That's my Dale Pinkert. And there still is a possibility that we don't make a new high and get this could be a failing rally here, and we head down one more time. This still could have been A, B, C for A, and I'm just an amateur Elliotician with a B wave, lower high, and then get a C wave to the downside. So that's also a possibility. Give me a Y if you see that. S&P still range bound. A diagonal in the guppy. Luca, you're thinking the same, gold new high, lower high in silver, or failing rally in gold? Okay, we're getting a new update for US dollar yen. I'm going to share a lot of these with you guys today because I was too tough on you yesterday. Basic technical US dollar yen. It's a 4-hour chart. $110 support, 88% retrace. 1025 made this slow the descent, but we're at major support here in the end, which kind of lines up with a one more puke in euro yen. Pretty ugly day. This is a 1 hour. Four hour. At new lows, we will be diverging. I know a lot of people before this were thinking about possibly 108 on the daily. Here's the 200. Maybe this is where we're going to get that last flush down at 108. Give me a Y if you see the 200 here. Hi, Tosin, how are you? Okay, here's a GJ setup by Jess, and then we have something by Tosin, then I'm going to take a break. This is the guppy. Okay, so Jess has seen it here, 36.30 into this demand zone. Not quite there. Some confluence with a couple of lines intersecting at 36.32. Great look, Jess. Thank you. And here's a look from Tosin. Tosin was real hot. 116 should give us some support. Right before I made the move over here to FA, Tosin was really in the zone. He's a very good trader. Independent minded. Don't fade this guy either. This is not a good community to fade ideas in. Do it at your own peril. But we have a lot of guys who their bread and butter is trading. So 116, this is Euro Yen. Kind of lines up with what Luke is saying at 1550. Okay, thank you, Tosin. I have a look from someone, KH Stalin. Nice to meet you, Stalin. I'll show you your screenshot, or you might put me in the gulag. This is your UJ view. I don't want to go in the gulag, buddy. Stalin, I'd rather have you as a friend than an adversary, just like in World War II. Thank you, Tosin. Getting something in the peso now. Okay, so you're looking for 108 if 110 gives way too. That would be equality of these two breaks at 108. Very nice look, Stalin. So that lines up with what I was just saying. 200-day comes in around 108. That could be an inflection point. Everyone thank KH for this look. Very nice look, buddy. Nice to meet you, and thank you for sharing. And I'm going to take a quick break. Let's see if we got it. I'll show the mobile app. Be back in 5, guys. There we go. So let me ask you, how many in here use the mobile app? Give me a Y if you use the mobile app. And how's it working for you? Okay. So there you go. You guys like the mobile. So you like being a portable trader. Now remember my one rule about a mobile app. Anyone remember what it is? Eric, Dan, Kevin, Jack, what's my one rule when using the mobile app? What's the one rule? Okay. No. Don't trade while driving. No, no trading when you're driving. Blake pulls over. Yeah, that too. But don't do that, it's dangerous. Ad-free face. You leave it till you stop. Good for you, Jack. Okay, Canada just breached a resistance level here. One of the first ones. This is a daily. Still think they want to take the stops out here. So crude must be coming off. Maybe that's what's putting the pressure on it. Yeah. Yeah, I saw, this looks like a 3 driver right here. Pretty good divergence in crude. So this may be what's happening with Canada popping here. Pretty good non-confirmations at the last high here. Crude looks heavy.
As we're seeing
on the
some
1
risk
hour.
aversion. Dale, and good morning.
Yeah, okay, so that's why Canada's popping, because S&Ps are under pressure.
Yeah, you know, a lot of times the Canadian will come under pressure. It moves parallel to the VIX, so if the volatility is moving up, dollar Canadian typically moves up. That's putting upside pressure on the dollar peso too.
Okay, so that's working out your patience with the peso.
Yeah, we might be setting up a double bottom here, which you know, we could scream up towards, you know, 19, maybe 1920 or so.
Okay.
Yep.
You're in the groove. Blake is grooving, guys.
I'm grooving.
He says that I'm finding my groove here in the room. You think anyone think Blake is right on that call? Give me a Y. I've spent my whole life preparing for this moment.
we still got some work to do, but I would keep an eye on some of these pound pairs, like the pound New Zealand, pound Canadian, pound Aussie. You know, the pound's been pretty well bid, and you know, if the market goes risk off, those crosses tend to be pretty bullish too.
Okay, so positive the pound crosses here, based upon and the S&Ps. Where would you have more confidence in the call you made a while ago, looking for 22.5 or so? What level needs to be penetrated?
23.15 would have to be broken.
Okay. Thank you, Blake.
You're welcome.
See, isn't it great that you know, we get Blake to chime in when he sees something? I mean, look, you just look at all the great looks we got from the community. I provided a couple of things, and then Blake chimes in. Nick, if you're here, always feel free to chime in. Anyone else that's part of the team, anytime you want. Don't think you're interrupting me. What you're doing is you're assisting me and giving a broad, diverse view of your method that may or may not agree with other methods, but this is intelligence gathering at the best, as far as I'm concerned. Everyone doing okay? We're only about 15 minutes away from the interview. You know, I'd like to check and just check it out and see if Terry is in here, even though we have a little bit of time, because he said he might have an internet issue. Search and see if Terry's here. Maybe not yet. So if you hear my voice, Terry, and you're here, give me a hello. You and me both, Jack. But you know what? Practice makes perfect. Yeah. So Terry Kinder is a very esoteric type of technician. He uses Murray math and a lot of different cycles. I know he's prepared a nice PowerPoint for us today. Everyone doing okay? I'm just scanning around a little bit here. I'm not that impressed with the pound until we could clear 4.5 here. Almost looks like a descending triangle to me, guys. Let's just say it's here. Here's your flat bottom. And this is exactly what was being shown. So I've seen a lot of descending triangles showing up lately. Have you ever noticed that during certain time periods in the market, you'll see the same formation popping up across different instruments? You'll see a lot of wedges at one time. You're not seeing my charts? How about now? There we go. See a lot of descending triangles there. Hi, Sam. Nice to meet you. Now, I can remember times you see a bunch of wedges everywhere. And now I'm seeing a bunch of descending triangles everywhere that are potentially reversal formations. So we'll see. This is gives me a bit of a downward bias, although we did clean out the stops here. I also could teach you a little bit about stop hunting before the interview. Okay, so people say, Dale, how do you know where the stops are? The screen is just black, Kevin? I see.
You know, in the past, I've had it. If any listeners
using a Mac,
they might want to log out and log back in, Dale. That's
okay.
That usually resolves individual issues like that.
Yeah, and I think I've heard it that happens if they're using a Mac. So I forgot what I was talking about.
Stopping, hunting.
Oh, stop hunting, yes. Okay, so how do you know where the stops are? So all you do is you just look at a chart and say, you know, if I was long, where would I put my sell stop? And that's where everyone else's are, for the most part. Or if I was going to be short, where would I put my buy stop? And that's how you know where most of them are. There are obvious swing highs and lows that people are using to define their risk. And I'm sure you guys have seen a lot of examples that all we do, and this may have been one, right? All we do is take out a previous low by just a few pips, and people have their sell stop right under here, and they got taken out, and now the market is 30, 40 pips above their stop. So can we make an agreement here? I think it's going to help you, that you should give it all okay now? Good, Kevin. Not to put your stop 1 pip under a swing or a swing high or low. To give it more tolerance, use less leverage, and give your stop a little tolerance so you're not susceptible to being picked off just under a high or low by 5 pips or so. Does that make sense? Anyone who places their stop 1 pip under, above or below a high or a swing high or low is just asking to be stopped out. Have you noticed that? But a lot of stop hunts don't follow through when they're stop hunts more than 20, 30 pips. Okay, so just something to consider. Terry Kinder's in the house. So I'm going to take just one more break. And then we're going to have a great presentation by Terry Kinder. Anyone follow Terry? Anyone know of Terry that's here today? Let's see there. Anyone follow Terry on Twitter? It's at T Kinder. Hardianto follows him. Okay. Nicola Duke, one of our team, Terry, follows you, and she likes your stuff and would like a little explanation, fundamental, quick explanation of Murray math. So I'm just going to play one more video, and then we'll go to work, and Terry's going to edify us, getting another Palme weekend on UK CPI G7. And the resistance in silver is breached, the first one. Hi, Terry, I just made you the presenter. So if you click your microphone and your screen share, we could get ready here. How are you today, buddy?
Pretty good. Can you hear me?
I can, Terry.
All right.
Thanks
Very good.
Yeah, thanks so much. Thanks so much for joining us today. I took a look at your PowerPoint. Yeah, I think it's going to be fantastic. So why don't you tell our, I know you have this in your intro. Why don't you tell us how you got involved in analyzing markets and having an interest in the market? And I know one of the calls and forecasts and predictions you're real proud of is that you forecasted that Donald Trump would win the presidency well before most. There were a couple that did, like Martin Armstrong did too, and I know you're also a fan of his. But how did you get involved in being a market watcher, market analyst, trader?
Well, I think a lot of it goes back to the financial crisis. I just got really interested in economics and markets and trading back then around that 2007, 2008 time frame. Just started studying a lot, got interested in technical analysis, started out really interested in the gold market, which I'm still interested in now, and I think it's just slowly evolved over time more into this probable range and Murray math work that I'm doing now.
And tell us how you ended up looking at Murray math as being a way to analyze markets. Did you have any mentor, anyone that pointed your eye towards that method? How did you come upon Murray math?
Well, I think I really just sort of stumbled upon it. Have always been really interested in like W.D. Gann's work and some other people's work. And there's a lot of people, I think, that have got some very similar, they're kind of looking at the same big picture, but I think from different perspectives. So if I kind of go into some of this, but I think Gann, I think Murray, I think both of those guys are kind of looking at things in similar perspectives.
So Murray math also takes into consideration time and not just price. Like Gann thought that time was more important than price.
Well, that's one thing that I think personally I need to do more work on. I think that I have a better handle on the turning points than I do on the time. I think I'm getting better at the time, but I'm not sure that the Murray math, or at least what I've seen of the Murray math, that it necessarily really deals heavily with the time aspect.
Right. And what kind of cycle theory do you implement? I've seen your charts, and you know how sometimes you post a chart in my stream, and your charts at times are very esoteric and very detailed, and someone will come up with a comment like, they're tripping on LSD or
right.
And I'm always defending you and your work. And all I could say is to all the people that are naked trader advocates, that instead of criticizing other people, that they should just draw their shades if they're trading naked, and be and be open to different methodologies, because I've seen you make some great calls. You know, you called the gold break last year too. So why don't we just continue on with your presentation and take it away, Terry.
Okay. Well, yeah, just feel free to interrupt me at any time.
Oh,
Also,
I see. I just did. So you can count on that. Go ahead.
Awesome. Awesome. Yeah, just real briefly about me. Like it says on the screen, I got my BA in political science at the University of Washington. Have basically been self-taught in technical analysis and cycle theory. And really, I mention it not so much to say, oh, I forecast this or not, but actually looking at Trump winning and projecting that he was going to win has kind of combined some of the methods that I'm using now as far as financial markets as well. But basically got a little bit over 80% of the state popular vote winners right, and pretty close to 90% of the electoral college votes correct. And that's basically using this Murray math and some other techniques.
Okay.
And then
what would be like a very quick description of what Murray math is?
a real quick description of it. Basically, Murray math is taking a price range and dividing it into eighths. So if you took the current gold market, you could look at it very simply as a potential high of 2,000, a low of 1,000. You've got $1,000 range. Divide it by 8, you've got $125. And then take your 2,000 would end up becoming the top of your range. It ends up being the 8/8 Murray math level. So you just take 2,000, subtract 125 from it, and just go down until you hit 0.
Okay, interesting.
So,
and what is that? And is that a natural number, or the eighth? Is it a fib number? I know you brought up pi. Pi is a big thing for Armstrong. Why is 1/8 significant?
You know, I don't know that I have a good answer for that, except that it works pretty well.
Fine.
It seems to be kind of one of those natural numbers that just works.
Okay, so there must be some type of harmonic in that number that it repeats like that. But go ahead.
Yeah, I think there's something to that.
Okay. All right.
But yeah, let me just move forward real quick. This is just a sheet. This just shows off one of my spreadsheets the states that were forecasted for which candidate and all that kind of stuff, and who won, and that's just in a little bit more detail. And I'll try to. I haven't done it yet. I'll try to put some of this online too, if anybody wants to go through it a little bit more quickly or a little bit more slowly. And then this was just my electoral college projection. On the left is what I projected, and on the right is what the actual electoral college vote was. So it got fairly close.
Okay.
At least I got the winner right.
Will he be reelected?
Boy, that's a tough one. I don't know. It is so hard to tell right now. I've kind of wondered, and I don't know that this will happen. I've kind of wondered if he got things sort of halfway where he wanted, if he wouldn't just go for a term also, if he wouldn't choose just to be president one term and get out. But I honestly have no idea. Everything's so murky right now.
Okay, I thought I'd throw it out there. Will he be able to complete his term, or is all this Russia stuff going to turn into some type of Watergate situation?
That's a good question too. I tend to think that he'll be okay, but I mean, he's definitely in a precarious situation because you know, he doesn't really have a base of political support. I mean, either the Republicans didn't really want him to be president, and the Democrats definitely don't want him to be president. So he's not in a very, very strong position as far as if they decide to impeach him, whether or not he'd make it through or not.
Yeah, I'm sure there are many establishment Republicans that would rather have Mike Pence in there. But
right.
Yeah. So okay. So this is old news. Great call. Wow, sources of inspiration. Bradley Cowan.
Right. He wrote a book, and speaking of esoteric, this is pretty esoteric stuff, and it's pretty hard to find any of his books. You can find them on some of your online book retailers and such. But he wrote a book called 4-Dimensional Stock Market Structures and Cycles. Really, really interesting. A lot of what he does is based on geometry, and he also does a lot of stuff which I don't really grasp. I'm not really into, but he does a lot of things with astrology actually. But I'm not really focused on that. I'm not really interested or understand that very well.
Okay.
But really good book if you can find a copy of it.
Okay.
And then T.H. Murray.
I think Peter Temple has read every esoteric book possible.
Yeah, that's probably true, isn't it?
Yeah, he even goes to New York to read original manuscripts. I forgot of who, but yeah, he's really into this stuff. So Cowan, and there we have Murray. I'm familiar with that name, and Tony Plummer. He's a GAN guy.
Yeah, that is a really good book if you pick it up. A lot of the ideas I have that I'm using with the probable ranges, a lot of the ideas are based on ideas in his book, in Tony Plummer's book.
Okay.
He really clarifies a lot of things. GAN can be very confusing, and I think GAN himself obscured a lot of his work, and I think people who talk about GAN's work obscure a lot of it, and Plummer makes that more clear than anybody I've read.
Okay.
As clear as you can make it. It's still a little bit tough to grasp, but.
And Martin Armstrong, who I've interviewed a few times, he certainly keeps his model close to his vest. So can you learn anything about how Marty comes about it? I mean, he has this model that the government wanted. He wouldn't give it to them. He served some time. How do you figure out what Martin is doing besides read what he's thinking?
Right. Well, I think a lot of what Armstrong does. Well, let me back up a step. If you ever look at some of Armstrong's charts where he has his dates and the way he'll write his dates, he might have a number that'll be a date and then 0.75 or 0.825. A lot of those numbers he uses, if you start to look at Murray math, they're very similar. And I don't know which one of, between Armstrong or Murray, who started using those numbers first, and I'm sure they were used, way before either one of them was born. But there's a lot of similarities between Murray math's numbers and the dates that Martin Armstrong uses.
Okay.
So I think if you start to understand Murray math, you start to understand Armstrong's dating a little bit better. And I think Armstrong has pulled in a lot of things. I think he's pulled in a lot of GAN's work. I think Armstrong's another person who's probably, and for good reason, has had to obscure a lot of how his cycles work actually works. And then just wanted to thank you too, Dale, for just all of your support and encouragement.
Oh,
I think that's been really helpful to me, and I really appreciate all your kind words and just backing me up when I have a chart that everybody goes, "What in the heck is that?"
Yeah. Well, glad to serve, and it's easy to be a critic, and I appreciate you tweeting in my stream and some very interesting looks. And I really believe in, like you said, I'm glad I'm an encourager. And thank you very much for acknowledging that. I appreciate it.
Oh, no problem. Yeah, I appreciate everything that you've done. Now, I added this in. I don't know if you had got a chance to look at it. A lot of the work I'm doing right now relates to probable ranges, and the probable ranges. Most of what I do on Twitter is actually designed just to be a day, and they probably tend to be a little bit wider on some things, maybe like gold, than people would find useful on any particular given day. But those
people make a lot of comments about. They make a lot of comments about how wide the probable range is,
right?
And how they could use them.
And that really relates back to the Murray math. It's sort of designed to the way I've designed it to encompass the extreme part of the range. I could make it narrower, and I may try to do that, but it's designed to catch the big swings rather than try to focus down really narrow. And
so this 970 to 1529 is your projected range for the next 23.3 years?
That's right, and that can change because these longer probable ranges, well, and shorter ones for that matter, but these longer probable ranges are based on the daily probable range. So as that moves up or down, that long-term probable range would change as well. But they don't vary hugely, but they can vary.
Okay.
So I think what's useful about this, though, I mean, you can say, well, who cares about 23 years? And you're probably right to an extent. That 1529, for reasons I can get into later, I don't think we'll get anywhere near that anytime soon. I think that's too high. I think that's outside of where the gold price is going to move. But I think the bottom of it's
there is one. Yeah, there is one Elliott case that could take it there. Based upon the rally that we had from 1050 to wherever we went, 1380, and
right.
Then we had a pullback and putting in a higher low at 1120. And if we had a fib extension, if this is a C wave or a 3, that we could get to 1500.
And I think
go ahead.
I'm sorry, and I think I don't know if you remember, not to put words into his mouth, but I think Peter Temple might have mentioned that too. I think he's got gold projected up pretty high, and I don't want to, I don't know that I bet money against him, but I just don't think it's going to get that high, but it could. Okay. But I tend to think it's not going to go that high.
Okay. So then this is your view of gold in 23 years. What's the next slide? Okay.
Then the next one is WTI.
Okay.
That's a much shorter time period. That's a much wider range. If you wonder why, and this may be too obscure or not too obscure, but why some of those ranges as your amounts get smaller, your ranges get wider, and that relates to square roots, because the square root is part of the calculation of these probable ranges. So very small numbers tend to be more volatile because the square root, the square root of 16 is 4. So on something that's priced $16, you're talking it could go down to 12 or it could go up to 20. That's right. That's a big move on something that's got a low price.
Yeah, your 3686 number is a big demand zone and retrace level for crude after the rally we had last year, and would still be a higher low by $10, $12 if crude came under pressure then.
So yeah, it's kind of interesting. A lot of these numbers keep coming up again and again, and people who use vastly different techniques, I'm always kind of fascinated. I don't look a lot at other people's numbers. Just I try to keep my own unbiased and not get too biased by seeing what other people think. But it always fascinates me when I do how often the numbers will come up again and again where someone is saying basically the same thing and they've got a vastly different technique to do it.
Okay.
And then DXY 90.05 to 111.89, and that's over 15 months.
That seems, well, both seem possible.
Right. And haven't you mentioned at some point DXY around what, 90, was it 92 or 94? I can't remember where you've talked about it possibly going down to.
Yeah, well, 96 was the election low.
Okay, right.
Yeah, so, that's a pretty, if it got through 96, it could see 90.
It could see 90, right. Okay,
Yeah.
okay. And then the last one on there, I believe, is the Dow, around 17,700 all the way up to over 23,600, sometime between now and August of 2018. Those are just bigger probable ranges, just some examples of those.
Okay. Both of those look possible. Okay, so now we're going to get into the Murray Mass. Okay.
This is some bigger, longer term numbers on Murray Math, and so the top level on that Murray Math is actually over 39,000. And
yeah, the Super Bowls have thrown out that 40K number on the Dow. They've thrown
really?
it out there. Yeah.
And I think I don't know when the video was from, but I a couple days ago I ran across it again. I think an interview that Martin Armstrong had done talking about the Dow at, I can't remember if it was 43,000 or so.
Oh, yeah, he's talking about a vertical market that stocks are going to become the only safe haven play, U.S. stocks.
And I think it's possible that you could extend out to about 43,200. So I think you could get over the top of this range, but I don't think you're going to get over the top of it by a whole lot, even if it goes vertical.
Yeah.
So I think that around that 39,000's
Where
close.
do you think the VIX would be? Minus 30 at 39,000?
Oh, I'm sorry, what's that?
The VIX would be minus 30.
I'm not sure. I can't imagine.
Okay.
I can't imagine what it's going to be at that point.
Yeah. It would go out of existence, maybe.
Right.
Okay. Right. All right. So these are your Murray Math levels, and we can see how you went from 1/8 all the way up to 8/8. So what was your starting point? The 0.8 at 0? Right.
And well, the way I've drawn everything, or the way I've drawn a lot of them, yeah, the 0 ends up being the 0.8 number. Not that we're ever going to 0, but yeah. And they're based on, I don't know that I'm going to go into exactly where the range comes from, but the range is kind of a formula based on a much higher number, which is based on a cycle and an incremental move per day over the course of a multi-year cycle. So it's probably a little bit geeky, but one of the things to note on these ranges too is that between 3/8 and 5/8, your price is going to spend about 40% of the time between those ranges. So that's where to me the Murray Math starts to get useful from a trading perspective, is that you can start to see turns if it starts to get down toward the 3/8. If it's trading between and it gets near your 3/8, you've got a chance at a bounce. And the same if the price on the Dow got up towards 24,437, there's a good chance it's going to come back down, because the 3/8 the 6/8 and the 8/8 tend to be areas where the price momentum will start to slow, whether the price is going up or going down. And that's actually one of the things. Let me go to this other range. Well, probably not this one. This is another one. This is a medium-term Dow Jones, but I'm going to kind of skip over it and go to this next one. I think this is a little more relevant, a little more interesting. The Murray Math, this is more of your current Dow Jones levels, and this is what I'm using a lot when I'm tweeting out these Dow Jones probable ranges. This is some
we're
of
playing a lot with that 5/8 number right now, aren't we?
Yeah, we're not quite getting below it a lot of times. We've been below it and above it a bunch of times, and we also keep bumping up against that 29.25 a lot.
Right.
That 6/8 is a real hard number to stay above, and I think it's going to continue to be. I think we're going to have a hard time making it. I don't know that we'll get above it, or if we do, I don't think we'll stay above it very long. I think we're looking at a trip back down to that 2/8, 19,575.
Okay. Yeah, I've heard, 10% correction would be about 19,000. That'd be about 8%, right? From the highs.
Yeah, that sounds about right.
Yeah. Okay.
Yeah, that sounds about right.
Is that why you have the red arrow there? That's where, that's kind of your target in the next quarter or so?
That's kind of where I think it'll go down to. With the way that my numbers work out, really the Dow was projected really to go about to that 20,250 number, and it stretched out way past it, and it's been over that for a while. But from that 4/8 level, it ought to back up to the 2/8 level.
Okay. Thank you.
I'm sorry.
There we go.
So here's another chart. I guess this is probably more typical of a lot of the charts I've done in the past, although it's probably cleaner than a lot of them. I tried to not make them too packed with stuff. But this is the Dow Jones, and I've got a couple of shift pitchforks stacked one on top of another. And there's also, I'm sorry.
Oh yeah, I just noticed all those. That's an interesting way to display pitchforks.
Right.
You stack them. There's normally just 3 zones, and you have all these zones. Okay.
Right.
Yeah.
Yeah, it's kind of a useful thing for, when the price breaks out of one of your pitchforks, you can just throw another pitchfork on top of it, and the resistance levels and everything work. They work pretty well. They work just the same as in the first pitchfork. But there's also, and it's a little bit hard to see, but you've got like this green channel. This is actually Murray Math channels, and you can see the Dow's been trading, running up around the top of that channel for quite a while. It just recently has kind of started to dip down a little bit again, but it's been trading way up toward the top of the channel. It's been making a real strong run. But on the chart, a couple things I find interesting is just that I drew a channel in here, and it's based on one of the things I do a lot too is I use angled lines, and the lines are actually based on Murray Math too. The angles are based on Murray Math numbers. So this 31-degree angle, because it's the closest I can draw, is based on 3.125, which is sort of the Murray equivalent of pi times 10. So that 31-degree angle has captured a lot of this move higher.
So it's interesting. Blake has been showing a chart like this too, where you have a rising wedge and you have a throw over. It blows through that red line on the top, throw over. And the signal to get short doesn't come until we're back inside the rising wedge.
Right, so, exactly. That's kind of where I was going with it. Yeah, and I think I think at some point we get back in that rising wedge. And one of the things I think that is in here a little bit later in the presentation is I think as we get toward the end of the year, we're obviously running out of room to run on this rising wedge, and I think we're going to drop out of it, and the Dow's going to back up quite a bit.
Okay, so it looks like your bottom line would come in at your Murray level, 19,575.
Right.
Okay.
Right. Yep. Exactly. So.
Okay, and wave guys would call that a wave 4.
Okay. Right.
And then you got wave 5 for another run to new highs.
So basically, my thoughts on the Dow is that once the Dow drops down somewhere around that 19,575, I think it's going to make another run up towards a new high. Whether or not it makes it, I don't know, but I think it's going to try. It's going to try to get up to that 21,600 level.
Yeah.
And I think once it gets up toward that level, I think it's going to break down out of that rising wedge, and it's going to drop quite a bit lower. At least to 13,500. It could get down below 10,000. It's going to run.
And what cycle tells you that it's going to be bearish until early 2020? Because, you know, a lot of people were talking about 2020 to 2022 back in 2000, that it was a secular bear, even though we've had a cyclical bull, and that it doesn't bottom, their work didn't show a bottom until 2020. What cycle do you have for 2020? Is it a Murray Math cycle?
Some of this, well, there's a couple of things to it. One of them is there's a 103.2 year stock cycle.
Mm-hmm.
It's kind of based on two 51.6 year cycles. It's kind of a longer, which is kind of a longer version of Armstrong's 8.6 year cycle. But there's a 103.2 year approximately Dow stock cycle. And if you go back, I think I've got this, yeah, on this slide. If you go, and the 2017.9, that's actually Armstrong's number. That's his number, and that's his cycle. But his next point in
that September in 2017 is a important high.
So, well, he doesn't say what it is. So I'm putting my interpretation on it. But that is the next point in his economic confidence model, is that December 1st date. So I'm kind of deducting based on this 103.2 year cycle. If you go back 103.2 years, you actually end up back in August of 1914 when the stock market was closed due to World War I. And when it closed, it was at its low. The 103.2 year cycles an alternating cycle. So back in August of 1914, it was at a low, which means supposedly that the December 2017 ought to be some kind of a pivot high. So according to the cycle, it ought to peak then and go down.
Right, so yeah, I've also heard that the top is going to be a second half story. So this lines up with that. And you're thinking that 2017.9, does that 0.9 equal the 9th month of the year, September?
No, it actually doesn't. It's actually to sort of grasp those numbers, you actually have to look at trading years and trading months. So you actually have to look at it as there being approximately 251 trading days in a year, and then it's 20 point something or other, I can't remember off the top of my head, trading days per month, and you actually have to do some division to come up with the dates. So the 0.9 is actually December. So yeah, that's another confusing thing about those numbers is
Mm-hmm.
you know, they look like one thing and they're actually another.
Okay. Interesting.
So
I'm learning.
So that's kind of the
every
idea.
day I learn that I know that I don't know.
Me too. Me too. I've got a whole lot more that I don't know than what I do know, but
Yeah.
Makes it interesting anyhow.
So we have just a couple of minutes left. It's okay if we go a little bit over. Terry, what else do you want to show us?
Okay, well, let's just go into the gold because I think it's interesting. I've just got a chart on the left is your late 70s, early 80s bull market, the
Okay.
top, and on the right is the run up to the 2011 top.
Right.
And they look really similar. They're not exactly the 70s and 80s run up. You don't really have very much of a left shoulder on it, and you have a lot more of a left shoulder on the last big run up. But I think the patterns are really similar, and I think they're going to play out in really similar ways. I really think that
I was actually in the business then. I remember gold and silver peaked on the Russian invasion of Afghanistan.
Oh yeah,
I
remember as a kid all that. Yeah, that's right.
Don't rub it in. I was in the business. You were in diapers. But the high was 880 in the gold and $50 silver. And I was kind of thinking if gold does resume a bear market, that would be a kind of a natural place for it to go to the previous high of a 20-year bull market. So we were in a bear market for 20 years after 1980, 1979, and maybe it would retrace back to that important top from late 79, 1980.
Yeah, I think it could definitely make a run at it. And I kind of see something similar playing out. I really think that gold is just gonna kind of trade sideways and down for a very long time. I mean, it could be 20 some odd years before it breaks out again and really goes significantly higher.
Okay, because the last bull market started when in like 1970. I mean, the first bull market I remember they made it legal for people to own gold in 74. Again, or 75, it opened at 200 and went to 100. And then we had a bull market until 1980. Then we had a bear market until 2000. And then we had a bull market until, 2013.
Right.
So, okay. And so it could be another, at least 15 years from the 2013 high.
Right. And I think there's potential. I mean, it could go all the way out to the late 2030s.
Okay.
And you could be in a bearish market till the 2030s. Of course, I mean, you can trade that channel. I mean, it'll go up toward the top and bottom of the channel for many years. I don't think it's going to break.
Your bias is that purple channel.
Yeah.
Okay.
Yeah, that purple channel. And I don't think we're going to get back over here, or we're not going to get back over much. I'm not sure exactly what that is. Up in the 1300s, whatever the last.
Yeah, 1380-ish, I believe.
Yeah, I think that's right. This is just some long-term levels on the gold.
There's that 880, the 1.8.
Yeah, you got your top of your channel all the way up over 7,000. What's kind of interesting about this, to me at least, is that 2.8. The gold market did get above that for a while, but
Right.
But it stopped. And I mean, you tend to have trouble getting through your 3/8 and your 6/8 and your 8/8, but it never did get much past this 2 2/8 level. So I mean, it's got a long ways potentially to run. I would think a lot of people, you know, you read on certain blogs and people who are real pro gold, you know, will say they think gold's going to go to 10,000 or whatever number. I really think, you know, this 5,000 number would be up toward the top of a range. Yeah.
Yeah.
I don't see it in the long run getting way past that. I mean, it might, but I think when people start tossing 10,000 around, they're just kind of pulling it out of wherever.
Well, they're getting some funny gas in their bomb shelter.
Right.
But you never know. So, okay, that's a gold long term. Why don't we wrap it up with one more slide, buddy?
Take a look at this one. I think is useful. Then this is gold medium term, and I think an interesting number to watch is this 4/8, this 1357. I have a feeling that's about the high. If we see another high up over 13, I think that would be about as high as we'd get. And then I think we could trade, you know, we could trade back down here after that, around that 1131.37. And then after that, it may just bounce around. I mean, at some point, I've thought for a long time it's going to go back under 1,000 at some point.
You still believe it?
I still think it will. Yeah, I still tend to think it will. Yeah, I've just had a feeling for a long time that it would, and I just think that it needs to. I think it just needs to have enough air let out of it before it can really go back up again. I think people have to give up, you know, practically give up on it, and I think it's going to take it pushing below 1,000 before enough people throw up their hands and say they're through with it.
Okay. Yeah, that would be a nice capitulation under 1,000. You know,
Yeah.
There's some guys like Dent and some of the other bears talking 700, 750. But we'll see. I'm going to look at that 1979, 1980 low if it gets there and back up the truck. If I still have a truck then.
Right.
And really, Terry, I appreciate you going through all the effort of putting together a PowerPoint and sharing your numbers. And I hope that pips and subscribers rain down on you, my trading analyst brother.
Well, thank you. I appreciate it.
Everyone thank Terry Kinder. You could follow him at tkinder on Twitter. And if you want to show your first page where they can write down the website to follow some, I would call it creative, unusual work. If you get tired of looking at the same type of conventional stuff, you're going to see some things that are going to stretch your mind out a little bit looking at these things. And everyone thank Terry for coming here and taking his time to share his work and talk a little bit about Murray. Did you get the definition you were looking for, Nicola? Okay, so this is where you can find Terry at tkinder, and there's his website, chartanalysis.silverback.com. Thank you, Terry, buddy. I'll see you on the stream.
Thank you. I appreciate it.
All right, partner. Good hunting.
Thank you.
And with that, I'm going to say goodbye to the crowd. Thank you, everyone, for your contributions today. Thanks for all the screen shares, Luca, Hardianto, everyone else. You're very welcome. I'll see everyone tomorrow. Enjoy your nice, beautiful spring day. We're having one here. You're welcome, Kevin. And remember, most of all, guys, don't just count your pips, count your blessings. I count being part of the FA team a blessing in my life and hanging out with everyone in face. So enjoy your day, and we'll see what the world brings us tomorrow. Adios.